All right, so good evening and welcome everyone to part two of this week's IMR. Part one got over yesterday and I uploaded the videos, so hopefully you had a chance to watch them. So I'm not going to repeat that. And today, Monday, 13th uh, March, not 10th, and we had our Holi. So happy Holi, everyone. Hope you had a good holiday. And hope you had some good stuff and all. We won't talk about what stuff though. And those of you who might have tracked the video I sent out or the SGX Nifty that I had mentioned, you may probably know that the SGX Nifty traded almost 220 points up today at about 9,160, 9,180, almost 9,200. What we had mentioned in the IMR yesterday was that probably 9,100 was a given. It went, of course, higher than that. And then we'll have to just wait and watch as to how we're going to go tomorrow. So as expected, probably it will be a gap up. The moot question is whether there's going to be a sustainable gap up. So that's one thing to keep in mind. The other thing is, of course, on Wednesday, 11:30 p.m. India time, is when the U.S. Fed meeting results will be out and quarter percent hike interest, quarter percent increase in interest rate is expected, and whether that is going to, put a sort of stop to the rise in the global indices, and that is something we have discussed in detail in part one. Do have a look at that. So what we want to do here is look at the Nifty stocks. Do a quick review and see if there are any good opportunities in the Nifty stock space. So let's jump in, and not that I'm looking at any particular, and I keep telling myself I need to reorder my list. So, and yeah, we'll go on. So you should be able to see ACC at your end, and look at that. You can see that after having moved in December last year from 1250 to 1500, it sort of corrected a bit, and there are some attempts last week to buy into it. You can see from the large volume there, but it got massive resistance sitting there with the multiple long-term moving averages, 50, 100, and 200 days just sitting above it. Compare this with Ambuja Cement, and you can see that more or less a similar picture. Ambuja Cement slightly looking better. The red dotted line here, the sort of blue come cyan dotted line, and the white dotted line here. Those are the respective 200, 100, and 50-day moving averages, and they're all clustered right there. One of the things we had mentioned in the first part of the IMR, part one yesterday, is that number of indices at very important support or resistance levels. It will be interesting to see which ones get broken, which ones don't. And both ACC and Ambuja are good examples of something like this. So not typically a great setup in terms of where it is right now. I mean, it could go either way, ACC and Ambuja. On the other hand, in the cement space, in the Nifty, if you look at Grasim, of course, strictly not a cement only stock, but still. And if we look at it, you can see that Grasim is actually trading at its life high. So Grasim had a corporate action recently. It used to trade around 3,000 bucks. So just in case you were wondering, it's now trading at 1,050. So it had a corporate action, and that's why it is now at 1,000, 1,050. And Grasim, in terms of compared to ACC and Ambuja, is at definitely at in a better place, technically speaking. And if one had to, then I would think that one would, in the cement space, go long on Grasim. And especially if it can break the double top of 1050, then much higher levels are definitely possible. I think one thing to note is that for all the discussion of all the stocks that we have today, it's very likely that quite a few of them will probably, gap up open tomorrow, especially given that these are Nifty stocks that we're talking about. And then it will be interesting to see how the follow through happens for the rest of the day. All right. So, Grasim, watch for 1050 and above, and if it goes and if it breaks 1078, 1080, then definitely probably a good buy. Having said that, both ACC and Ambuja, you should watch for them being able to break out of the bundled moving averages which are there, and if they can break out of that. Right now they are all acting as resistances. So let's move on because there's probably other stocks which have a better setup or an opportunity rather than just these. Looking at Asian Paint next. So Asian Paint, what's interesting is it's of course had a massive run up from even say 2000 when it was a 16 rupee stock, which is now a 1,000 rupee stock. Clearly a multi-bagger. And then of late, it after hitting its life high at 1,200, it had steadily come down to 900, and then it seems to be up on its way again. From a weekly perspective, the correction seems to be over. The uptrend seems to be, back in track. The only thing is it's back at again another example of a stock at an important make or break support resistance in this case. Apologies for my yawning if you can hear it. Been a long day on the farm. So 1,030 here, except that very good support at the lower end. Now the question is whether 1,030 here can break or not, and I would think it would. And if it does so, then 1,100, 1,150, and even 1,200 are distinct possibilities in the days and weeks ahead. So this is definitely not a stock for shorting, definitely for going long. In terms of various supports and resistances, this has a huge amount of support at lower levels, so it's always difficult in such situations to know where exactly it could stop out. For traders, anything below 1013, but for investors, it's only below 970, 972. Okay, coming to the banking space. So it's just first on the list here, Axis Bank. So one of the things we said in the first part of the IMR is how the public sector banks and the private sector banks are behaving very, very differently, and that there's definitely a lot more bullishness in the private sector banks right now than than the public sector banks. Sorry. So Axis Bank, had this sort of double top made at around 650. Corrected quite significantly, almost 30-35% to 440, and then has been going up ever since. And looks like a sort of flag formation, maybe a little long in terms of time, but nevertheless still a flag. You don't really have the typical volume picture on this, but still pretty much okay. Had a nice head and shoulder bottom, left shoulder, head, right shoulder, move out. Complicated by the fact that there are all these moving averages which are there, but all said and done, pretty nice. If you can defocus a little bit and look at the shaded area between what I call the Bollinger Band, so you can see this gray shade here. Right, there's a band up there, that's the upper Bollinger Band, and here is the lower Bollinger Band. You can just focus and defocus your eyes rather on just the gray shade. You can see how the downtrend has gradually and smoothly turned into a nice uptrend going up over a period of time. And when I say period of time, we're talking about 4 or 5 months. Just to give you a sense of how different studies can give you slightly different perspectives, and also in terms of time, how long it takes for things to turn around. Right. So has come to 515, 520, and then likely to probably go up. Only issue is the U.S. Fed rate hike. So one of the things in India is that the decreasing interest rate cycle is over, and then we'll have to see how this goes in terms of the overall banking space with the next RBI policy in India. But all said and done, as far as Axis Bank is concerned, a break above 530 could easily take it to about 540, 550, etc. Seems to be a nice turnaround, and in the longer term, once it breaks 620, then we would have to see. In the 2015-2016 scenario, this is like a sidewards, very wide consolidation that has happened, more for long-term investors. That is relevant, not for traders. Okay. So while we are at it, let's just also do the other banks in Nifty. So this is the HDFC Bank, big massive life high made about 3-4 weeks back, right? So 16th, 17th, right? This big gap that you're seeing here, and I should put a note on this. Where is that marker? Yeah. FII. All right. So there was some set of bonds that got sort of converted, and then it was given out, settled, and that simply meant that FIs could now buy again. Otherwise, the FI limit had been maxed out. So it gapped up from 1135, 1130 to 1445, and then just was hammered back down. So you can see this big massive volume there. So that was because on account of some conversion. Very unusual, different type of corporate action. You can read up about it if you like. And then this correction and this gap is not over, right? So that's something I should make sure it's there. Okay, right. So at some point the market is going to come down to 1330, and one should probably put an alert for that. And on the other hand, going above 1440 could take it all the way to 1500 quite easily. So gap aside, probably still headed to higher levels. HDFC. So this is how a lot of the bigger banks I think are set up. You can see HDFC like this. HDFC, though it's not a bank, of course. You've got this multiple resistance zone. So it had hit a life high here sometime in March 2015 on the left of your screen. Didn't break that much actually in September 2016, and then sort of attempted to go there in Feb 2017, but really couldn't manage to create a new life high. You can see the volumes. The volumes after that on the sideways consolidation, not really small, so that's really one thing to sort of keep in mind. So 1440, and then if there's a lot of support at lower levels, again it's a tough call to say exactly where the support might be taken, but I think 1420, once it's broken, then it'll probably go higher, maybe even till 1500. ICICI Bank is going down through the list to finish the banks first. So ICICI Bank clearly had a bad day last few weeks. It's one of those banks which has really never been able to go significantly past its 2008 peak here. It did make a life high in 2014, 2015, but then got quite badly hit by the NPA situation on private sector defaults. Still not able to really, go beyond. Uh, Other banks have, if not gone up, more or less stayed sideways in the last 2, 3 weeks. This one seems to have gone down, and well, volumes I would say seem to have reduced this time. This is more like one of those. It's still a weak bank, to fundamentally speaking. Notice how it's probably come back to this head and shoulder bottom neckline. So left shoulder, head, right shoulder, and it's come back to that neckline, right? And you can notice that it's come back to that neckline on, I wouldn't say particularly low volumes, but nevertheless low volume. So this could actually be a nice low risk trade-off on tomorrow, except that probably gap up, and then you'll have to watch that gap. Also, this head and shoulder bottom is not really a good head and shoulder bottom in terms of there's no prior downtrend. So that's something to keep in mind. Could more be construed like a consolidation or a inverted head and shoulder rather than a head and shoulder bottom, which of course you cannot see now in the weekly charts, but you could see it in the daily charts. So actually just going back to the weekly charts, um, let me see the volume. Oh, this is really nice. So interesting. So you can notice the high volume here before the dip. You can notice the very, very low volume within the dip, and then you can see the high volume again going out of the dip. If you've got a multi-week, 2, 3 month type outlook, then this is a good possible potential trade to think about, not just for a week or two, but maybe for a month or two. Please note the timeline, November to March now, so that's almost 5 to 6 months. At a pretty good low risk place, I would think. For investors, exit would be below 260, 258. You'll have to, think about how you use your mind to manage the emotions of seeing a sharp downtrend like this and a lot of red candles and then still buying into it. But this is something I think definitely to keep track of in the coming week. IndusInd Bank. So this is one which has actually made a new life high, had a fantastic run up. All right, so it's been a stellar performer, of course, way better than our just previously viewed ICICI Bank, and I would think that this is set to go higher. So consolidating for about 3 weeks at about 1300, 1330, and from here probably headed to 1400, 1450, even 1500. Stop loss would definitely be below 1281, right? On the spot market is where it would be. There is definitely some resistance at 1365, but once 1365 gets taken out, then 1415 are definitely on the card. So that's IndusInd Bank. In terms of relative strength, I would definitely say that this is the best bank setup that we have seen so far. There are probably some more. Let's look at Kotak. So Kotak attempting to make new life highs, but unable to actually, move out. So that was the previous life high there at 830. Came there and definitely in uptrend. Absolutely no doubt about that. The only unfortunate thing, not unfortunate actually, mm, yeah, not unfortunate, but one sort of iffy thing is the nature of the candle here. It's like a shooting star getting, constantly beaten down. Looking at the volumes, this is not particularly good. You're seeing sort of erratic volume. You're not seeing consistently good buying volume and consistently low selling volume. I'm wondering what's going on. I switch to weekly charts on a week by week basis. Looks okay, but would have definitely been happier with higher volume in the last 4 to 6 weeks. But anyhow, that is what it is, and we'll just have to go with that. So looking at this, definitely an uptrend. Could go up. 850 would be the first psychological resistance, I would think, and once it can clear that, then 875, 900. But one thing to, I think, very carefully watch out for is, if there is a gap up tomorrow in all these, then does the gap close intraday, and then is it better to enter at that time, or get in the early part of the session, first 15 minutes, half an hour, and from a trader's perspective, and hope the correction doesn't come too soon. Right? Don't forget the Fed meeting by Wednesday. So if you do take a trade tomorrow, day after, that's something to keep in mind, because on Thursday morning, after we know about the Fed, we could get another gap of a different type, maybe up, maybe down, who knows. Okay, and especially these are all banks, so it's one more thing to keep in mind. Okay, so we are done with the private sector banks. Let's move on to the public sector banks, of course, starting with SBI. And SBI, well, as you can see, not anywhere close to its, or not too far from its life high, but still nowhere close to creating new fresh life highs like you saw in most of the private sector banks. 2010, there was this life high at 330, then a nice, very significant double top between 2010 and 2015 at the same price, 340. We come back to 160, put a nice triple bottom at 145, 150, and then we've been going up after that. You probably have read up about those new SBI charges, the minimum balance, the transaction charges, etc. A lot of WhatsApp messages going around to, in protest of that. Wonder if SBI will really do anything. If anything, there could be just a partial rollback, but that's another revenue stream that's going to start. Another small news, just on the side, keep scanning the papers, is that SBI is setting up a separate facilities management company as a subsidiary. So apparently, some of the bank executives, especially the mid-level or some of the senior ones, also have to keep taking care of administrative estate management. SBI sits on a huge land bank, as we know, in all the major cities, and the routine banking guys are also in charge of taking care of facilities management. So they're going to sort of separate that function out and put it in a separate company and have dedicated team look after that. So whether that means better efficiencies, I really don't know, but just mentioned it in passing because came across that news. Anyhow, so you can see again here the inverted head and shoulder pattern after the up move here from 150 to 280. We saw left shoulder, head, a sort of very small right shoulder, and a breakout. A sort of head and shoulder within a head and shoulder could also be forming, and you could definitely, there is a significant resistance here at around 285. If 285 gets taken out on SBI, then 300, and then 320, and then of course you'll have to watch 340 and see how it goes from there. All right. Okay. On the lower side, if it does break down, the thing is that there's plenty of support at lower levels, and might be more tempted to buy at lower levels rather than get out or exit too quickly. All right. We have then where is that? PNB. Right. Punjab National Bank. You can see how it is just sitting at 141. Again, you can see a sort of V-shaped recovery here. Not exactly on the lines of the head and shoulder bottom, inverted head and shoulder, but nevertheless, you can see how after the run-up we've had this sort of correction, except that this red candle here, not a really good healthy sign, but there is consolidation happening for the last 4 weeks. and then if we can break above 145 in some meaningful fashion, then that will really be good, right? 145, 150 is where the big issues are, and then after that we will probably reevaluate. Won't be surprised, they're not surprised, sorry. It's a possibility that tomorrow or the coming week it could break out from there, and then could see a much a potential for a much stronger run if it can do that. Again, on the lower end, lots of supports, so not really a good stock to short. Okay, then Bank of Baroda. So here's the thing, a very different picture, obviously. Bank of Baroda just slipped. This one is below the long-term moving averages. SBI was above, and so was PNB. So these are sort of mixed pictures, and the stocks do tend to sort of behave differently. You can see that this picture is actually quite different for Bank of Baroda. Little iffy. And on something like this, I would just prefer to stay out of it rather than break my head and try and figure out where the levels are. So Bank of Baroda is a pass. Okay, so I think the best setup was perhaps IndusInd Bank and Kotak for a potential long, and no shorts definitely on the banking side. All right, going to the next space, we have, well, let's look at Bajaj Auto. So Bajaj Auto here is also consolidating auto space. So this had made a nice big life high 3,100 after breaking out of it. You can see this symmetrical triangle which happened a few weeks back, right? And then how it broke out, almost probably reached the measuring implication and corrected, and then is on its way back. Okay, right. So pretty good volume. You can very clearly see that good strong volume buying is there. Indicators look pretty strong too. Very supportive, I think, of a possible further up move. So Bajaj Auto, possible a flag formation here, 2,760 to 2,900, right? And a sort of 2,000, yeah, that's how much? 240 bucks. 240 bucks from there. 3,100, 3,000. What? Sorry, one sec. Yeah, 30. Yep, 3,000 rupees is, I think, quite a good possibility on this. It's just so just a psychological level there, of course, but 3,000 is, I think, a distinct possibility on Bajaj Auto with a stop loss below 2,845, 2,843. Right? So you could look at that. So when we look at Bajaj Auto, we also look at Hero Motors and Hero Motor Corp. So dealing with its old life high, and in a sense we have, not in a sense, we do have nope, not bad, an ascending triangle. So I hope you can see it. I'm sure you'll recognize it once I put the lines. So that's probably the level there. And there you have it. Right, so just learn to ignore this green line. Hey, why is it not? Hmm. So ascending triangle measuring implication from 3,300 to about 2,900. That's almost 400 rupees, which would take it to, well, how beautiful is that? It takes it back to its old life high of 3,700. Please note again that this is like a 4-month period that we are talking about. So this is something that could definitely be, kept in mind. So Hero Motors. Right. Hmm. Right. So that's definitely looking good, even on a volume perspective. Not pretty good from this place. I would have preferred that, prefer lower volume here, but especially in the last second half of it looks pretty good. Tomorrow it will definitely gap up, and I think the best hope could be if it comes back down at 3,300, or you get it anywhere at 3,260, anywhere there you would really be lucky. All right, so I think that's a good find. And then so those are the only two in the Nifty stocks. Let's move into the four-wheeler guys, starting with M&M. So correction 1,500 to 1160 in the second half of last year. A rise after that. So long-term M&M, what you can see, 14, 15, second half of 14, 15. So almost 2-year consolidation between 1150 and 1450. Someday, some week, it will, break out of that, and then we'll see a next move on M&M. A good place to buy will always be at around 1140, 1200. If it does come there, that's the support zone there. It's in the middle of no man's land right now. So from a long-term perspective, it's neither effect. We should do nothing. From a trader's perspective, one could definitely look at considering going long on it with a very, very, very good stop loss around 1270, 1271. And if it breaks 1350, then 1420 is a very, very real possibility. Again, I think the volumes are quite supportive of further up move, except that the indicators are not really too strong on that side. But then you rarely get everything in one place. All right. Maruti, so Maruti, again, one of those stocks that has done really well. Um, Planning some more launches this year and some new cars under development. Okay, so that is Maruti. Someday, sooner than later, I think this is going to be a 6,000 rupee stock. I don't know if it will happen this year, but I think, yeah, considering it's going to be a 10,000 rupee stock. Okay. All right, so it's come to a support zone, and that support zone is here. As you can see, right, it's come to a support zone, and from here it is quite possible that it could take support and bounce up. Nothing particularly great in the volume side, but still you could go along on this with the stop loss at around 15790, and once it clears 6,200, then it's going to go to much higher levels. 657 cannot be ruled out. Okay. Then that brings us to Tata Motors. So there was this big fall in Tata Motors because of a big drop in profits. So that's something that is a big concern. Came down to look at this. I mean, just to point out um, something on TA for all those of us who are maybe not yet convinced about it. So on this day, right, there is, I think, some expectation of this was a JLR result. Yeah, it comes out, and the next day the stock opens 10% down. Right, so over 2 days, it falls from 500 rupees to 430 rupees. And look at how it comes there to a sort of known support in the past, about 3-4 months back, and then has gone up there and closed this gap. Okay, so there is a gap here that it has managed to close. The only issue is that it got sold off on pretty good volumes, but hasn't yet really been bought back on good volumes. Now, obviously, um, the market knows more than us, and for some reason it has gone up. But the real big test will be for this to break above 488, 490. That's where all these resistances are, and that will be the real test. So compared to all the other setups in the auto thing, it's not that Tata Motors can't go up, but you probably got better, more higher reliability setups in the other stocks that we have seen. All right, so probably put Maruti here if I had to. Okay, so that takes us to the auto say. Oh, I forgot to look at Ultratech Cement, and when we're talking about cement, and this is probably the strongest one on the cement side. This has really broken out of a triple top resistance zone in 2016. Then you can see it going from 3,400 to 4,100, came back, tested it, came to the lower levels, and then is probably heading back up there towards 4,000. A sort of unusual gradual trend up like this. Usually, I know after a sharp move like this, you'll actually see a sideways or a slight correction, but this is like still inching up. Right, inching up and inching up on gradually increasing volumes, though it doesn't really seem to have price momentum. So that's a little bit of a sort of a surprise, if I could say that. So little bit of a very iffy sort of thing. Stop loss is probably below 3750, and if it can keep sustaining this, then very likely that high levels of 4,000 are distinctly possible. All right. Okay, let's come to our pharma pack, because there's something quite distinct in this. And on the pharma pack, in terms of Dr. Reddy's, this stock actually broke down from some important support levels, right? So you have this level of 2008-20, which is over many years and really important level to watch out for. Let me just make it a different color. Right. And what it did last week, right, is that this gap down fall that happened on Thursday, and it happened on pretty massive volumes. You can see that there was some active selling before that, right? Not sure where this what this was on account of, but clearly this was some something on the corporate side, something quite what would I say? Um, Company specific, I think that was happening, and people in the know were in the selling mode, and then probably some news came out, and then it just sold off. For those of us who would like to investigate more, you should probably look at go and track some, see if there's any news items in the recent past, and you'll probably get a better understanding of what might have happened here, right? So this is probably going down, and this is one of the stocks that if it goes back up to 2,800, even 2,850, you should probably look at shorting it and not at going long. So this is a good shorting opportunity, especially since it's broken a 2.5 year support zone, and the next level is probably somewhere closer to 2,500. So a move up tomorrow, day after on Dr. Reddy's should definitely be used for shorting and not for going long. Okay. Okay. So if we look at other things in terms of in the pharma space, to see if there are similar stories. So you can see Lupin now, and Lupin, broke 1,500, staying below that, but it is quite range bound. It's possible that if Lupin breaks this level of 1360, 1370, then we'll probably have much lower levels. And which brings us to an important thing, which is that the next probably important support on Lupin is much lower at 1,050. So if a breakdown happened on Lupin, there is probably a massive good shorting opportunity. Not that it can't stop below that. It could go to 1,200, 1,100 and turn back down. But quite possible that 1380, 1400 could break, and then it could go down in steps of 20s and 50s and 100s, all the way to even 1,000. So this is something else to be kept in mind. Okay, shorts. VRL, Lupin. All right. I don't think we have. Do we have anything else in Pharma Nifty? Yes, of course. Sun Pharma. So we've got Sun Pharma there, and clearly this is behaving differently compared to the other two stocks that we saw in the pharma space right now. However, do notice that the volumes are really not on the upside. May go up to 700, 710, and then from there might slip back down. We'll have to wait and watch. Tough to say. So 700, 710 or 650, whether it breaks down. So this one I would just skip. No need to look at things which are not particularly well placed. All right, so that's it as far as pharma and Nifty stocks in the pharma are concerned, in the pharma space. So let's look at IT, and then maybe we'll close after that. So if we look at the IT space, let's start with where is that? TCS. Right. So TCS, in spite of all the H1B and the other things that the IT space is experiencing, has been going up of late. Even the management has been quite bullish about the future in spite of Trump. They are like, we don't think it will get too bad, and they are expecting growth to happen, or at least them being able to perhaps do much better or relatively better than their competitors. So a big nice move from 2050 to 2542. Nice tweezer stop, as you can see, and probably will break out of that, except that you can see pathetically low volume in the last 1 week. Right, so which really makes us wonder what is going on. And this is one more of the stocks which is at an important resistance level, 2550 sort of, and whether it will break out. If it does, then clearly the next resistance is at 2700. Okay, 2700, 2750, and that's a massive resistance which is there. Let me just extend this into the future. Keep it there. Right. So that's the level to watch out for. If 2800 breaks, then that will be a very, very important resistance level on TCS, having been taken out after 2014. So 3.5 year zone that we are talking about right there. So watch out for that. If it does do that, TCS in the, who knows, maybe um, sometime this year, then TCS could go up another 1,000 rupees easily to about 4,000 bucks. So that's for the longer term perspective. Okay, so then looking at Infy. Looking at Infy, so it's done a nice double bottom, right, and then has broken out of that trading range sideways, and then been able to go up in spite of the recent noise about Sika and some governance issues, etc. 1050 is the level to watch out for Infy, and if it breaks out, it's very, very critically poised at the 200-day moving average on that stock, and if whether it can break that or not. If it does, then 1050, all of these levels are probably likely to happen, at open tomorrow morning. It will really be interesting to watch. So, it will be really interesting to watch how it behaves going forward. Okay, so stop loss, somewhere below 990, 980, but if it does go up, then yep, it could easily be 1080, 1100 in the flash of an eye. Okay, coming back to Wipro. So Wipro gone up again, sort of. See how similar Wipro and Infy are. Infy hasn't broken out of the 200-day moving average. Wipro did do that, but got beaten down last week. And then the question is, what does it do later now? If it can break 500, then we're looking at 520, 530, and there's a stop loss at around 474, 472 on Wipro. By the way, just keep in mind that as a space, overall space, the IT is still something which is challenged in the longer term, and that is something to not forget, right? Okay, so that I just want to do two more, and then maybe we can close for the day. One is GAIL, and the reason for GAIL is that we are having it at a triple top. Okay, so this is a sort of cleaner chart. You can see that at this price here, yeah, is where GAIL more or less triple top closing price is, and that's exactly where we are. So talking about 2010, 2011 rather, and then 2014, and then now in 2017. So this is not from a trader's perspective that I'm addressing this, but more from a longer term perspective. GAIL, if it can break out of triple tops, and triple tops, as we all know, are pretty significant, then could be setting itself up for a pretty strong move in the coming weeks. The only issue that I have, and this is not a very happy one, unfortunately, is, or a supportive one rather, is the sort of volume picture that we are seeing. Instead of seeing these red volumes, if you're seeing green there, that would have been a much, much better thing, and I'd have probably said just go buy it blindly and just keep holding on to it. But unfortunately, cannot say that. Not sure what's going on. If there's any, stuff one can dig up, then maybe we can discuss that at some time in the coming week or something. Multi triple top, whether breakout or not. So that will be the moot question. If it does, then GAIL going to 500 is a very, very real possibility, is what you have to keep in mind. Yeah, let it take a year, let it take two, that's fine. That's almost 20-30% of a move that we are talking about, right? So just have to wait and watch. Really, nothing more to say. If there is one thing that is probably in favor of this, sorry about this, is what you see in the bottom two parts of the screen here is one is called the PVT, or price volume trend, and OBV, on balance volume. Both are showing good long-term buying, volume-based buying in the stock. So that's the one thing to sort of keep in mind. Looks like PVT has broken out of its life high itself. The PVT's life high, and actually so has OBV. So probably some glitches in the short term is what I would think. Maybe it's a stock that could perhaps even go back to 320. Um, is a possibility. But if it does that, that will be a even better opportunity to probably buy it and then once it breaks 400, then 500 is a distinct possibility. And lastly, we have to look at Reliance. So Reliance, as we know, especially for those of us who've been in the IMRs and FTDs, sorry, free to dreams and EQNS's last few sessions, uh, my strong views on Reliance. And finally, after almost a year of waiting, I would say, it has broken out of that very important resistance of 1100, 1120, that multi-year symmetrical triangle. The measuring implication around 1400 has probably not been met yet, right? So we can take it from 1180 all the way to say 580, just to keep it simple. So that's 600 rupees, yeah. So if you look at it from that perspective, 1100 plus 600 takes it to 1700. But that is something that is perhaps months away, or at least a few weeks away. So at the very least, I think Reliance is something that is probably going to give us many opportunities for the weeks and months ahead. And every dip should be used to perhaps go into it. It'll probably gap up tomorrow, and there's really no significant correction that has happened after the breakout. I don't expect that to happen too soon, but for those of us with a strong heart, emotions under control, and a decent mark-to-market ability to finance mark-to-market drawdowns, one should probably keep this in mind. At the very least, it should be in your demat account, right? From a multi-month to multi-year perspective is what I would think. And of course, on that on Reliance thing, you know that Geo is going to be charged coming from 1st of April, and I don't know whether it's a sort of ploy, but I've been experiencing slower speeds on Geo, especially last 2-3 weeks. Before that, much higher speeds. So maybe just a push from Mr. Mukesh to tell us to go pay and start paying him so that we can enjoy better services if we pay. And yeah, we'll at the time we'll see. So yep, so Reliance definitely is there, but more from a long-term perspective. So I think yeah, these were probably the key ones here. So just to reiterate, Hero Motors, Bajaj Auto, Maruti on the long side, short, DRL, Lupin, Infy, something to watch out for, especially for the 200-day exponential moving average setup, and look at GAIL and Reliance for their respective stories, right? Cool. So I hope that went well. I hope the experience was smooth at your end, and I hope Geo kept its speeds and the shifts were screen shifts were all right, right? If there are any questions on any of the stocks within the Nifty, I'd be happy to take that, or if anything that we discussed. It will definitely be an interesting day tomorrow. I plan to be watching it hopefully online here live, uh, the internet connection permitting, of course. And do take the opportunity to observe the markets right from start, and it'll probably be a good lesson to, or a good set of things to discuss. If I was in Bangalore, I would have definitely set up a live session at BAC. I'm not, so let's see. Maybe we can do a live interaction 8:39 onwards. I just have to see how things are here before I can commit on that. So those of you interested, we'll sync up in the morning and maybe take it from there, right? Okay. All right. So thank you. Sleep well. And dream about the profits uh, tomorrow, this week, next week. And if you can, in case you have not, do watch part 1 of the IMR before tomorrow morning, so that you have a better perspective of the larger picture that we can expect in the coming week, right? All right, so great. So I'm going to sign out. This is signing out from my farm on somewhere in Sakleshpur district, and look forward to catching up with you tomorrow. Right? Thank you and good night.